Spent the entire week looking for an opportunity in the markets. No opportunity presented itself. The only trade that I could have taken would have actually been a loss. And good thing I avoided it. And I stayed very patient, stayed very true to my rules. All I have to do now is just wait till this next week and wait for the next opportunities. I'm not forced to trade every single week in order for me to make money in the markets. I make money when I enter the right positions. And as of right now, I haven't seen the right positions. So we have to wait.
So this right here was the trade that could have actually been a loss, and I'll break it down to you to explain how we avoided this loss. Right? I noticed that a lot of people actually took this trade, and I understand why you took the trade, right? But just being a little bit more careful will help you avoid losses. So let me break down the trade. It was not a bad trade, but I will explain how we avoided the loss. Right? So coming over to the daily time frame. So this is just a quick trade recap before we break down all the 20 pairs you are looking to see for next week, right? So the trade was on GPP card. The first thing we had was a very strong area of interest. As you can see, we had multiple rejections from this area of interest. It's a very strong one. The daily time frame was also bearish because this right here was the lower low, and we just needed a retracement back into the area of interest to sell, right? So that's that for the daily time frame. The weekly time frame at the time was pretty much still bearish. We had a very strong candle to the downside. Then the 4-hour time frame, which was the cleanest time frame at the time, was also bearish, right? So we had this break. We were hoping for a retracement to around this level to sell, right? It's a very, very textbook trade setup, right? So now let me explain how we avoided that loss, right? And I actually told you guys how we did it right here, but I will break it down here live. So this right here was the break, right? We had the retracement. Having the retracement, we are looking to sell around this level, right? We started seeing bearish signs. We started having 3 red candles, but compared to the volume of the buyers, the sellers were strong. We need the sellers to be strong or stronger than the buyers for us to be confident in selling, right? Not bad. So if you look at this next candle, you can see that it was also a very strong bullish candle and engulfed the selling candles. So the buyers were still pretty much strong in this market, but the following 4 hour, we saw that we had a very strong red candle right here. So if I come a little bit closer, you can see that we had a very strong red candle right here. So this right here was an engulfing candle, right? Usually what we wait for is a very clean break, retracement, and an engulfing to sell, right? So now we could have simply entered this trade right here and put our stop loss above this high, but the reason we did not do that is because this right here is the 4-hour time frame, right? If you know the strategy, you know that we actually enter if you know the strategy, you know that we actually use the entry time frame, which is the 1 hour, 30 minutes, or 15 for entries. In my own case, I always use only just the 1 hour time frame because I feel like the 30 minutes and 15 do have a lot of false signals, right? So now coming over to the 1 hour time frame, let us see what we had there, right? So price was pretty much bullish coming into the area, and then it started shifting bearish around this level, right? So I don't know if I should draw it. So let me just draw it and bring it out. So this right here was pretty much what price was doing. We were bearish, as you can tell. So let me bring this down to explain it a little bit better. So we'll just start from the lowest point. The lowest point on this market is right here, right? Which makes this what the new this is the lower low, right? And the lower high for that market is this one right here. So as soon as we broke above, this will now become the new higher high. This will become the new higher low. As soon as we break above again, this will become the new higher high, and this will become the new higher low, right? As you can see above here, we broke again. This will become the new higher high. This will become the new higher low, right? Below we broke, and then this will become the new lower low, and this will become the new lower high. Now at this point in time, we should be paying attention to the market because the entry time frame is now bearish, so we want to sell with a bearish market, right? So but if you look at the volume on this market, you can clearly see that the volume compared to the buying volume is actually very low, very slow, right? Now I will not blame anybody for entering this trade because they were actually entry signals. It's just that it was very tight, right? Coming over to the Telegram channel, let me explain what was happening. So at the time I dropped this trade, I told you guys I was simply waiting for a bearish engulfing to actually sell this candle, right? To actually sell this trade. Then coming over later, I saw that there was actually a very tiny engulfing candle right there, but I was not really online to actually take the trade because I was actually asleep, right? But I told you guys I will still wait for a cleaner break and retest under the area of interest and under EME to take the trade. Now, the only reason I was waiting for price to be under the EME was mostly because there was no volume in this market. What I mean by volume is very strong candles like this, or very strong bullish candles like this, or very strong bearish candles like this. This right here just kind of feels like a consolidation. We know that the market is bearish, but it still feels like a consolidation. And by the way, price is still inside the area of interest. Again, we need price to be above area of interest to be buying, and we need price to be below area of interest to be selling, right? So if price started trading below, I will be more interested because first of all, we'll be under area of interest to be selling, and then we'll be under EME. So there'll be extra confluence, right? This right here, it doesn't mean that there was no reason to take the trade. There was reasons to take the trade, but it was not enough reasons. That is the only reason I did not actually take this trade. And apparently, Alex G did not take this trade too as well. And this would have been a loss avoided in some people's books and not in some people's books. So I hope that you guys really understand this explanation. Again, it's very important to be watching this longer version of the weekly setup. Shout out to these guys for actually understanding that I'm taking my time right here to break down all these pairs live, right? And then let's break these new week pairs to see what we have for the new week, right? For 25th of May and so on. So let's start over with GPBUSD. So GPBUSD, we were actually looking for sales last week, still never got it, still never took the trade. Again, very similar thing we are looking for, right? Price was bearish. We just needed to have a deep retracement for us to sell. So I will just clean everything because I really like to have a very new perspective anytime I'm coming into the market, right? So this is what daily time frame is, what bearish, right? Daily time frame is bearish. So I'll draw this area as my new area of interest, right? And I'll extend it to the left to have multiple rejections so that if I can get multiple rejections, I'll know it's a valid area, right? Now, from what I just explained, you can see that we had one rejection right here. Going over to the left, you have two rejection, 3, 4, and 5, 6 rejections from this area. So this is a very valid area of interest on the daily time frame, and daily time frame is bearish. That's one information. Let's see how the weekly looks. Now the weekly time frame, not so much of a clean price action. In my own books, I'll be calling this a bullish market because this right here was the lowest point at the time, right? And this is the highest point. So this is still the higher high and this is the higher low. But we are still under area of interest. So we at least need the 4 hour to be bearish for us to take this trade, right? Now coming over to the 4 hour time frame, and you can see that the 4 hour time frame is bearish. And why is it bearish? Because this right here is the lowest point, lower low right here, and lower high is right here, right? If I go over to the left, you can see that that's actually the lowest point. Now that we are currently at area of interest, what do we do? Now this is better. This is actually a better trade because we are under area of interest and we are under EME, right? So this is how I'll be playing this trade. I'll wait for some form of clean price action under this level, somewhere around here. So this right here is around Tuesday, okay, Monday or Tuesday, right? Depending on what I see around here, I'll decide on if to enter the market, right? So, but all we need is just a very clean break and retest on the 1 hour time frame. See, let me explain something to you guys. Again, another source that the longer version of this weekly setup gives you, right? Let me explain something to you guys. One thing I've noticed with trading this set and forget strategy is that the set and forget strategy, I'm telling you most solemnly, it actually boils down to the 1 hour time frames, break and retest and engulfing. Let me explain what I mean. You see, there are multiple trades I've taken, right? Some trades are good, some trades are bad, some trades do not fully, um, do not fully follow the system. Let's assume like maybe the daily is still bullish, but maybe there's a one candle that is still like indecisive, something like that. It's not, sometimes it's not very like as textbook as possible, right? But I'm telling you, what you should be focused on after finding all the details that weekly time frame, the daily time frame, and the 4 hour time frame will give you is the 1 hour time frame break, retest, and engulfing. I'm telling you right now. You see this 1 hour break, retest, and engulfing. If you get everything that you are looking for on the daily time frame, you get everything you're looking for on the weekly time frame, you get everything you're looking for on the 4 hour time frame, but you do not get the 1 hour break, retest, and engulfing, man, don't enter that trade, bro. Listen, I'm not saying it's not going to play out. What I'm saying is that over time, it is going to like is really going to mess you up. What I mean by mess you up is going to keep your account negative, right? The 1 hour entry time frame, I think I just call it the golden time frame. The reason is because every analysis I do on the 1 hour, on the weekly time frame, the 4 hour time frame, 1 hour, 4 hour time frame, it all boils down to if the entry signal is there, and we can only find this entry signal on the 1 hour time frame, which is the entry time frame. If we do not get that entry time frame confirmation, we cannot enter this trade, right? And now let me explain to you what the 1 hour time frame, what you should be looking for in the 1 hour time frame. The 1 hour time frame, what you should simply be looking for, I'm telling you right now, is a clean, emphasis on that clean break, retest, and engulfing. Now let me explain what it means. So this is pretty much a break, retest, and engulfing, right? So this right here is the break. Why? Because it broke above this high right here, right? So this right here broke above this high. That is a clean break. Now this is also a break, but that is not a clean break. Notice that this right here broke above this high, but this is not really a clean break. I need a break that is very clean, that you can clearly see without squinting your eyes to look for it. You know what I mean? Now that is the first thing. It should break above a high. Done. That is in a bullish scenario, right? Now the retracement should come around 50%, like above this high or less than this high. Now you can just simply use the Fibonacci tool for that. Let me show you what I mean. So if I use the Fib for this, if I draw it from this low to this high, you can see that I need the retracement to be here, 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 or in between any of this level. So let me bring this out to show you what I mean. If I draw the Fib outside here, right, I need the retracement to be anywhere from here to here. I don't know if that makes sense. I need a Fib to be anywhere from this level, from 0.5 to 0.718. So now the retracement is very important because we just need a very clean retracement. Now, what is not a clean retracement? A retracement that is way too up like this. This is not really a very clean retracement. Again, I'm just giving emphasis on the clean break, retest, and engulfing. The break should be clean, the retracement should be clean, and the engulfing should be clean. This is not a clean retracement. And this one is not also a clean retracement. This is a double bottom. It's not a clean retracement. This right here is a double bottom. It's not a clean retracement. Could it play out? It could play out. But I'm telling you, 9 out of 10 times, it starts to shift structure after entry, right? So I've noticed this pattern. If just a very clean break, retest, and engulfing will save you from a lot of trades. So I'll just give you an example before we continue. So if you look at that trade we took, GPP card, if you look at that trade, we did not take it, by the way, but if you look at this time frame, where is the clean break and break, retest, and engulfing? Like, you have to squint your eye to find it. Do you understand what I mean? Does that mean that they're not engulfing on this market? There is engulfing. Now there's one trade that we actually missed. Let me look for it. I think it's USD card. Yes, USD card. So if you look at this USD card, all I was looking for is just a break, retest, and engulfing above area of interest. If you look at this market right here, we actually missed it because I was no longer paying attention to the market on Thursday. I was paying attention to a video I was creating for YouTube, for you guys, right? So if you look at this, can you see the clean break and retest and engulfing? This right here is a very clean break, broke above this high, a retracement deep enough but not equal lows, and the engulfing, which is strong enough because it engulfed about 1, 2, 3, 4 candles, right? Now, I'm not saying that the engulfing must engulf more than one candle. That's not what I'm saying. I'm just saying that the engulfing should be clean. It should be visible enough, right? And then you enter on the next candle after the engulfing, a very clean trade. I'm telling you, the set and forget strategy for the last time, it all boils down to a 1 hour clean break, retest, and engulfing. So that's the source right there. I'll not be telling people about this source on the shorter version of this weekly setups, right? Only the people watching this longer version should know this information. Anyway, let's continue with the weekly setups, right? Now, the next pair we have is Euro USD. The pair we finish analyzing is GBP USD, by the way, and GBP USD we are looking for sales, right? Again, on the 1 hour time frame, I will simply just be waiting for a very clean break, retest, and engulfing. I just need it to be clean for me to be interested, right? Sometimes you might get the entry signal, but if it's not clean, I will not be interested in that market. That's just simply what I'm looking for. Clean break, retest, and engulfing. That's it. Euro USD next pair. Let's see what we have. Market structure right now currently bearish on the weekly time frame. The daily time frame is actually bullish, right? It's actually bullish. So I'll explain why it's bullish, because this right here is still a higher high. Sorry, this right here is still a higher high, and the higher low for that is still right here. Now, what makes sense in this market is actually for a minor retracement right here to sell, but seems like we're not going to be getting it because the daily time frame is already bullish. So because of that, we don't have two time frame in sync, right? Because we don't have two time frame in sync, we cannot enter this market. So that is that for Euro USD. Gold. Let us look at gold. Let us look at gold. Now, let's go over to the 1 hour time frame to look at gold cleaner, right? Now look at this right here, right? Let me add something. When I was talking about that clean break and retest and engulfing, right? If you need extra confirmation, not necessarily extra confirmation, but you need a okay, let me explain it in the best way I can. Let me explain it in the best way I can. Break, retest, and engulfing, right, is a trend continuation pattern, right? Which means if you're looking for buys, you're looking to if the market is already bullish, you're looking for ways to continue buying, but you need a discount. It's a trend continuation pattern. Now, the set and forget strategy, especially the break and retest, it works to very well with a trending market, right? It works very well with a trending market. What I mean by trending market is a market that is moving very aggressively to the upside or to the downside. Now, that's break, retest, and engulfing I'm explaining to you guys, right? If the EMA is in favor with that trend, it's more favorable. If the EMA, let's assume you are buying, if the EMA is under, it's more favorable. If you are selling, the EMA should be above, it's more favorable, right? So, I mean, this doesn't always work on gold. I'm not saying it always work, right? Because I've tested it just a little bit. But this right here was a break right here, retracement, and engulfing right here. So this could have been a trade right here, right? But as you can see, the trend of the market was clearly bearish, right? Whereas I was expecting that it might shift bullish right here. Now, the only thing that was against us was simply the trend of the market. As you can clearly see from the EME, the trend of the market was actually showing bearish signs, right? Does that mean that this trade can play out or might not play out? It's not all the time, right? But look at this one right here that I might potentially take next week. We have a clean break, retracement, and we have an engulfing right now. This trade might actually cook for next week. So I'm telling you guys, I might actually be very much interested in selling gold next week, right? So I'll be interested in selling gold, but it will depend on how market opens on Monday, right? So gold, I am actually adding it for this week for sales next week, right? So gold for sales next week. USD card, next pair. I expect USD card to simply continue bullish until we get to around this level right here. So this might give a 1:3 risk reward ratio, but We actually missed this one. I don't know why this thing always happens, right? When the market is no longer giving opportunities, you start to miss trades. I don't like that. Anyway, USD card, we don't have any opportunities right now. So we have to move to the next pair. CAD JPY. All right, CAD JPY. If you guys can see right here, it looks like it was a losing trade, right? Now, I was actually calling this one for last week, but we did not enter this market. Again, I broke down exactly why we will not be entering this market, right? So let's go over to the Telegram to show you guys why we did not enter this market. I was paying attention to this market right here, as you can see, CAD JPY. I was paying attention to this market around here. I told you guys I'm genuinely debating if to enter this market or not in the next 15 minutes, or I wait for London session to kick in. Tomorrow is card bank holiday as well, so I'll decide soon, right? So I told you guys what I decided eventually. So I told you guys, all right, I've decided not to enter the trade. I had 15 minutes to think about it. Here are my reasons, and I broke down all the reasons on why I told you guys why I'm no longer interested in this trade. First of all, there was no bullish engulfing. The candle was a Marabuzu candle down here because price might actually come back to the negative just to create that wick, right? Today is 17 May. This month alone, we have had like 9 weeks or spikes to the downside, and I'll show you guys right here. If you look right here, you can see very ridiculous long weeks to the downside. As you can see, I'm just reading what market is doing, right? So I'm just reading to see if it's safe. Now, because we have long weeks to the downside multiple times, and we can barely actually see any wick to the top side, that shows me that because I'm buying, I'm actually more at risk, right? If I was selling, well, I'll hope for one of these weeks to actually maybe give me the profit I'm looking for, right? But market was actually just creating weeks to the downside, so that's why I was not even interested. And our 1:2 risk reward ratio, which is our final take profit target right here, was more than the take profits, more than was higher than the structural point. So this right here is supposed to be our final take profit target, but we are not going to be closing any trade that is less than 1:2 risk reward ratio, and our 1:2 risk reward ratio is higher. So it was just there were way too many risks. By the way, even if you enter this trade, if you notice after entering the trade, there was another week again. You see that crazy week I told you guys to the downside, you can see there was another one right here, right? So that is the reason we do not enter that trade. So this week we just avoided losses, right? So again, I told you guys why it is important to avoid losses in the game. So I know that we not trade last week because it doesn't mean we are not active. It just simply means that we are trading, but we are avoiding losses, which means we are protecting our capital, right? You trade when you also avoid losses. It's still the same thing as trading. All right, so let's all see what card JPY has to offer now. So should I delete everything? Let's delete everything. See a cleaner perspective. All right, so the area of interest we'll be using will be this one right here, right? Again, it's not so clean on the daily time frame, but we can clearly see at least some reactions from the area, right? So we'll look on the 4 hour time frame to check if it's clean. But for right now, what is the market structure telling us is that market structure is bearish. So daily is bearish in my opinion, right? Weekly is bullish in my opinion, and let's see what the 4 hour will tell us now. Now 4 hour time frame, let us look at the area of interest again to see if it's a clean one. All right, so let us come closer to see. So right here we had right here we had one rejection, two rejections, right? We had some kind of a rejection right here, another one right here. So I mean the area of interest is good enough. It's good enough. Now I'll be more interested in selling these markets for next week, right? But again, as you can see, we don't have a clean break retest. We don't even have a clean break and retest right here. Right here, you might be reading market structure, squinting your eye. I'm not up for that again. I'm not up for squinting my eye to look for it. It has to be clean. clean break, retest, and engulfing. Clean break, retest, and engulfing right here. That's all I'm looking for. To me, this right here, I'll just simply look at it as just one leg to the downside. That's it, right? If it's not clean, I am not interested. But another thing I'm interested is that I like as the EMA is now shifting structure bearish. So I'll be interested in selling this market if you can get the opportunity. But all I'll be looking for is the 1 hour clean break, retest, and engulfing to be able to sell. So this is exactly what I'll be looking for next week. Break, clean, retracement, engulfing right here to continue selling. Right now, why am I interested in selling? Mostly because the market structure is bearish, and plus these weeks that are happening to the downside, well, it might actually happen in my favor. There are more chances it might happen to the downside than to the upside. Mostly because it has happened to the downside 1, 2, 3, 4, multiple times, 5, 6, 7, multiple times. But to the upside, that's actually barely happened. Do you understand what I mean? So CAD JPY for sales next week is a good idea. GBP JPY, let us see what we have. Now GBP JPY, let's check the daily time frame. Daily time frame is still bearish, but it's a very tight one. Now I don't like double tops, right? It's a very tight one, so but it's still bearish. Let's see the weekly. Weekly bullish, 4 hour, very indecisive, but if you look at it right now, it's actually bullish, right? It's actually bullish. So what will make more sense in this market technically is just a minor break and retest to buy. Technically, it's just a minor break and retest to buy. I don't know if I'm going to be interested in buying this market next week. I'll just keep it around to see, but I believe it should be buying. Daily time frame on Euro JPY next pair. Let's see. Let's delete everything on the chart. All right. So first of all, daily time frame. We don't know what's going on here, right? Right here, you know, you can look for a market structure right there. I'm not saying it's a bad one, but the market structure is actually bearish. But this right here, there's a lot of very indecision happening right here. You don't even have to take my word for this. Simply look at the EME, right? You can clearly see that the EME is just pretty much flat, right? That simply shows that there's not even a clear direction in this market right now. It's just clearly flat. So in a flat market, again, I just explained why where the set and forget strategy works. It works on a trending market, a market that have curve. Okay, let's just use that word. A market that have curve. So if the EMA is curving like this, curving to the upside, clearly trend to the upside, then it's a clean market because now you can have clean break, retest, engulfing, and you can buy to the upside, right? Simple. But if the market is flat, it doesn't work. So I'm not be interested in selling or buying in a flat market. Clearly, you can clearly see very flat, very, very flat market. I don't know what to do on Euro GPY, and because I don't know what to do, I'll simply not trade it. It's as easy as that. Card, GBP card. So let's delete all we have on this chart. GBP card daily time frame still overall bearish, but we are going to be looking for an area of interest. It's not going to be clean. I can barely actually see anyone. It might actually be an area right here. I don't know. I'm not feeling confident in that area of interest, first of all, right? But the daily time frame is bearish. Let's look at the 4 hour. Now the 4 hour time frame is actually bullish, right? So I'm not really interested in GP card. Next pair, NZD JPY. So NZD JPY, apparently we're looking for sales right here, but we did not get the 1 hour clean break and retest and engulfing, right? So we did not take the trades, but let us see what we have right now. We delete everything to have a cleaner perspective of what the market is doing right now. So the market, NZD first of all, what's going on here? Not so clean, but we do have an area of interest right here. So let me draw it right here. So let's go to the 4-hour time frame. I think it will be cleaner on that time frame. So we have a 4-hour area of interest again. So we have a 4-hour area of interest. Now let us see if this market structure is bullish or bearish. I will argue that this market structure is bullish right now, but it will soon shift bearish. So let's see the daily again. Is the daily bullish or bearish? Daily is not so clean, but I'll call it bearish. I'll call it bearish. 4-hour time frame is also bearish. So we arguably have a 2 time frame in sync, right? Also, let me draw this area. Let me draw this area right here. So I'll explain why I'm drawing this area. It's just simply because we have had few rejections to that area before. So if you look right here, we had one rejection right here, another one right here, and we are rejecting it recently, right? By the way, if price does not break under this area, then the EMA cannot start trending to the downside. So we need a trending market, and seems like we're having some left head, right shoulder right here. So coming over to the 1-hour time frame. All right, coming over to the 1-hour time frame, it looks a little bit more cleaner now, right? All we are simply going to be waiting for again is just the very clean break retest and engulfing right here, right? So I'll be adding this pair for this week. So let me show you exactly what I'm looking for. A clean break, a retracement to sell. I think this break is too big. A break like this, a break under this low, a retracement which is around 50%, and then a confirmatory entry to sell. Stop loss would be, this is exactly where my stop loss would be, because I need reactions from that area. So my stop loss will be above this high right here. So NZD I'm adding for this week for sales. GBP All right, so GBP we are looking to sell at some point, but the retracement was too deep. So because the retracement was too deep, we are now above area of interest, and we cannot really be selling when we are above area of interest. We need to be below area of interest to be selling, right? But the daily time frame is still bearish, and the 4-hour time frame is actually currently bearish, right? So what will make sense is for us to be below area of interest, and we need clean market structure to sell, right? So we need like a retracement before the break and the reaches to sell, right? I don't think I'm interested in this market. Just not, it's simply not just as clean as I would like.